Electric cars and SPACs, or special purpose acquisition companies, are hard to overcome in the race for 2021 stock market excitement. Indeed, Wall Street has discovered a way to bring the two together, literally, in a manner that is unique. SPACs have been used to take many high-profile electric vehicle firms public this year, and there are expected to be even more EV-SPAC mergers in the near future. Everything that has been spoken about EV-SPAC transactions has given them additional significance. Therefore, investors must exercise caution. These firms are experiencing a flurry of activity on the stock market, and the SEC is investigating whether they misled investors or not. Lucid was the subject of the most recent investigative request. In today's video, we'll talk about the hyped SPACs and what Lucid did in reaction to being subpoenaed by the Securities and Exchange Commission, what caused its stock to plummet, and what investors might expect in the future. So, grab a cup of coffee and settle back as we explain the debates. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in our upcoming videos. As investors become more dubious of their long-term viability and securities authorities analyze their financial statements, electric car startups that went public via SPAC transactions during the last year are attempting to demonstrate their value to Wall Street. Meanwhile, Wall Street is keenly monitoring vehicle reservations, which are a leading sign of future sales. Others have initiated advertising or marketing initiatives to entice prospective purchasers. Despite some market instability, the pace of EV-SPAC acquisitions in 2020 and 2021 has been dizzying, and there are no indications of slowing down. Here's a quick rundown of some of the transactions that have recently closed or are in the process of being finalized. Electric Last Mile Solutions was in negotiations with Forum Merger 3 Corporation about going public via a merger. With the help of Hennessy Capital, Canoo was seeking for SPAC magic via a company merger. QuantumScape, a lithium-ion battery manufacturer, was in the midst of merging with Kensington Capital. These firms are part of a growing number of electric vehicle startups that have gone public or have announced intention to go public via SPACs or special purpose acquisition companies. Despite the hoopla, none of the businesses has created a competitive automobile, and others, such as Fisker and Canoo, are still more than a year away from even delivering their first vehicle. Inquiries from the SEC have been filed against at least 3 SPAC-backed automobile companies: Nikola, Lordstown Motors, and Canoo. Each company has fired the founders and CEOs of the firms in question. Nikola founder Trevor Milton has been charged with deliberately misleading investors via the use of social media and is negotiating with U.S. officials to pay a $125 million fine to resolve the charges against him. Lordstown Motors is being investigated for pre-ordering vehicles and merging with the blank check business Diamond Peak Holdings. The SEC is investing substantial resources to address developing difficulties in SPACs, new ideas and suggestions regarding SPACs, and how to properly safeguard retail investors. As a result of the regulatory increasing engagement, there has been a significant slowdown in the SPAC market. Not all of the EV startups have failed miserably, though. Lucid has been working hard to complete the mission and meet the expectations of everyone who has talked about it. However, the U.S. Securities and Exchange Commission has requested information from the luxury automaker in connection with an inquiry into its blank check transaction, adding the company to a growing list of corporations who have come under examination for their merging with shell companies. Following the disclosure on December 3rd that it had received a subpoena from the U.S. Securities and Exchange Commission, stocks of the luxury electric vehicle manufacturer plummeted almost 14% in pre-market trading on Monday from $48 to $41. Lucid stated in a regulatory filing that the inquiry seems to be focused on the business combination between the company and Ativa Inc., as well as certain estimates and representations. The company is cooperating fully with the SEC in its review. In recent years, several special purpose acquisition companies were involved in the transaction, including electric car manufacturers Nikola Corp and Fisker Inc., but the Lucid merger was the biggest of them all. The California business has joined a long list of other electric car manufacturers that are being evaluated by government agencies and authorities. But Lucid's situation, on the other hand, has not yet been made completely public, and the only indications are that the estimates are misrepresented. Pre-market trading on LCID shares on Monday showed a decrease of 14.3%, suggesting an opening price of $41.51 per share, signaling a drop that would still leave the stock almost 320% higher than its $9.83 listing price. As a newly publicly traded business, Lucid reported a relatively small third-quarter loss and said that Saudi Arabia's sovereign public investment fund had a controlling ownership of roughly 1.02 billion shares. With 13,000 bookings, the company's order book value goes up to about $1.3 billion for the three-month period, which ended September 30, 2021. Despite the fact that the breadth of the probe is still a mystery, Churchill Capital 4, the SPAC that combined with Lucid Motors, has been the target of many class action lawsuits from angry shareholders. These lawsuits identified specific occasions in which CCIV disclosures about the Californian automaker's capacity to deliver fell short of what was expected. Some lawsuits state Lucid Motors was unable to meet their deadline of delivering automobiles by the spring of 2021. Instead of the 6,000 automobiles that were promised in the run-up to the merger with Churchill, Lucid Motors projected production of 557 vehicles in 2021. In light of these, the optimistic representations made by the defendants regarding the company's operations, financial performance, and prospects were misleading or without a reasonable foundation. The startup has now reduced their 2021 delivery promises to 520 units, so keep this in mind when making your investment. The AirDream Edition EV, according to anecdotal reports on social media, is experiencing unexplainable delivery delays for certain consumers who had pre-ordered one. CEO Peter Rawlinson of Lucid Group has restated the company's promise to produce 20,000 units by 2022. Rawlinson, on the other hand, has recognized supply chain restrictions as a potential danger to this aim. LCID has faced a massacre after the SEC announcement, with the company being down more than 13% in pre-market trading. For now, this seems to be a reflex response since there is very little relevant information available. But there is good news. The investors' confidence in Lucid has driven the stock back to its starting position, with trade closing at $47.27 a share on December 6th. A long period of patience and perseverance will be required if one is to bet on Lucid Group's success. Currently, the organization is focusing on achieving profitability, which may take some time. Keep an eye on LCID stock levels for a better entry price. The lower the price at which you end up purchasing it, the better. I'd like to hear what you think about this situation. Do you feel that the SEC subpoena will have a negative impact on the company, or will they be able to handle the situation sooner rather than later? Let us know what you think by leaving a comment down below. Dieter Terrason argues that the current price of LCID is much lower than its peak level. It will fall to an acceptable level and remain there until they're able to produce in large quantities and turn a profit on occasion. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.